Hello, hello, hello. Hello. See if it's working. Okay, it is working. All right. So today we're gonna be doing Bollinger Bands. Last live stream we did moving averages. We explained what a moving average is, and I gave 15 examples, and also did like some live trades. Now for Bollinger Bands, let's begin. Okay, so Bollinger Bands work in two ways. First way they work is going from the edge. This is called the edge, as you can see. There's this lower band, upper band, middle line, but you can call them the edge. So basically, Bollinger Bands work like this. They go from. Wait, let me just check the live stream. The edge. Yeah, it's working. Okay. So Bollinger works from the edge. So it goes from here to here. Okay, let's restart. Bollinger Bands have three attributes. Uh, Lower band, upper band, middle line. Then they go to from the edges to the middle line. This is the first way Bollinger Bands work. So for example, if the stock is right on the edge and it starts going up, as you can see, it gets like a green candle, right? You can buy a call all the way to the middle line. And as you can see, it goes from 405.72 to 424.93. And that is one way Bollinger Bands work. So for example, you see Netflix. Netflix is on the edge of the Bollinger Band. It starts going up with green candles, and it goes all the way up to the middle line. That is nearly 20-point call. It's pretty good. Next way you can use middle line is if the middle line is broken upwards, as you can see with the green candle, it goes from, as you can see, 423.87 to 448. That is a 25-point call. So when the stock breaks the Bollinger Bands, it breaks the middle line upwards, it goes to the edge above. So you can see you had two opportunities for call. Right here, and then right here. Let's see. Well, if you bought two contracts, you sold one here, then sold one here. That's about a 40-point call, which is incredible in a stock like Netflix. Let's be honest here. Next way you can use the middle line. You can use the middle line by in Netflix, because we're analyzing Netflix. We have 14 more stocks, by the way. 14 more examples. So in Netflix, as you can see, it breaks the middle line downwards, and guess where it goes? To the edge. It goes from 425 to 394. That is an incredible put. And basically, this is how Bollinger Bands work. I mean, you could also see it with the strategy of moving averages. I showed it in my last live stream and the last video, where Netflix broke downwards, with the moving average of 20 and 40, and they crossed, and then it went from 442 to 428. That was the put I was intending to get, but then it went all the way down to like 404. This is where I sold, and then it kept going down. But today's Bollinger Bands, so you can either use moving averages or Bollinger Bands or both. Both is an amazing way to trade. When you don't have moving averages, you have Bollinger Bands. When you don't have Bollinger Bands, you have moving averages. Perfect. And when you have both, even better. So basically, Netflix broke the middle line, 426.44, and went all the way down to the edge, which is like 392, which is absolutely incredible. And as you can see, you can also operate it here. So, okay, you could have bought a put from 427 to 394. Absolutely incredible, just using Bollinger Bands. You could also have bought a put from 445. As you can see, it starts with the red candle right here. You buy a put since it's going to go down to the middle line. 445 to 426. That's about 19 points in put. Again, absolutely incredible. You bought 2 contracts, one here, one here. Oof. Incredible. And that's how Bollinger Bands, well, part 1 works. Part 2 of Bollinger Bands works like this. So, basically, Bollinger Bands have this thing where they can break upwards. So, as you can see, like, this is a pretty, like, right here from right here, it's like pretty condensed, as you can see. Like, if you compare the upper band and the lower band from here to here, it's pretty big. You see what I mean? Like 362 to 304, it's like 60 points. It's a 60-point like gap sort of. Right here, the gap is 347 to 314. It's about a 30-point gap. It's like half the size, basically. What does this mean? Well, this just means it has more volatility. When a stock has more volatility, it pays more. So, for example, right here, from right here, right, you could have used this strategy, middle line, blah, blah, blah. You could use the middle line, goes from the edge to the middle line, then middle line to the other edge, right here. You could have bought the call, goes 317 to 327, 329 to 345. Only thing is, because the gap between the upper band and lower band is so little, that means it has low volatility and it pays less. When a stock has low volatility, it pays less to operate in it. For example, this trade pays you way less than what it did right here. Like incredibly less, just because this has more volatility. More volatility, more buyers, more volatility, and greater profit. That's how Bollinger Bands basically can tell you when to operate and when to not. Because, for example, you could have operated this call, gotten some profit, but you're not going to win a lot because there's like barely any volatility. Now, how do Bollinger Bands work? Part 2 of it. Well, first of all, this is, number 1 strategy, edge to middle line to edge, edge to middle line to edge. That's the first strategy. Second attribute of it is volatility. You can tell when a stock has good volatility, and you know when to buy it. You know when to buy a stock because of its volatility. Second strategy with Bollinger Bands is when it breaks a Bollinger Band. Right here, as you can see, this is the breaking of a Bollinger Band. When a stock breaks a Bollinger Band, it can go up for about 1 to 3 days. And then after the 1 to 3 days, if it keeps going, it could go up for a week. Just straight call, like 355 to 443. Like 90 points. But you're not going to actually trade this. What you're going to see is an uptrend tendency. And when you have a tendency like this, you start operating more and more calls. And you know where the stock is generally heading to. And that's the second way to use Bollinger Bands. And as you can see, it also works on the downside. As you can see, the stock breaks the Bollinger Bands. What I mean by break is like right here, it was the middle. Then a red candle comes, and then it gives like this huge slant downwards. Let me find a better example. Right here, right? So the Bollinger Band was like this. It was pretty stagnant. It was pretty even. It was like a line sort of. And then it just gets like this huge slant. Like absolutely huge. Like it goes like a 90-degree angle right here. Like as you can see, sort of like a 90-degree angle right here. pretty big. Probably like a 110-degree angle. Well, that's not important. But basically, it breaks the upper band. It could break the lower band or the upper band. It breaks the upper band, so you buy a call and it keeps going up, 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 up. Same thing happened here. The stock breaks the Bollinger Band, but downwards, and then it keeps going down. It goes from 343 all the way to 290, which is about 50 points in put in Netflix, which is absolutely incredible. And that's basically how it works. The moment a stock breaks the Bollinger Band, it goes down for like 1 to 3 days and sometimes even a week. If it's downward. If it's upwards, then it goes up 1 to 3 days, sometimes a week. Boom. And as you can see, this is pretty recently. This is like phase 1 of the strategy. It goes from the edge to the middle line to the edge to middle line to the edge. Like right here, you could have bought this put. Absolutely incredible. And then you can use type 2. If Netflix keeps going down, and makes it like a bigger slant, the Bollinger Bands, then Netflix could go down for a lot. And like a lot. Like for example, if it makes a slant like this, Netflix, then we're talking about like a 40-point put. But of course, it needs to make a bigger slant. So, in 1 to 3 days, we'll know if Netflix is heading downwards like this again. Boom. Next stock is NVIDIA. Alright, so with NVIDIA, as you can see, same thing happened. Middle line to edge, as you can see, edge to middle line. You can see a green candle comes up and it goes all the way to the middle line. Of course, is where you sell. And it goes from 418 to 448. It's about a 30-point call. Then it breaks the middle line and it goes from 445 to 479. So it goes from 445 to 470. It goes like to 479. That is about a 33-point call. Again, absolutely incredible. And then as you can see, it gets a red candle and it nearly goes all the way down. It goes from 480 to 450. Which is about a 30-point put. Again, these are like massive moves for NVIDIA, and you can tell just using the Bollinger Bands. Now, it also did break, phase 2 of the Bollinger Bands. It did break, and the Bollinger Band, the downwards one, the lower band, and it made a slant. And as you can see, it goes from 434 all the way down to 407, which is about a 27-point put. Absolutely incredible, and it took 1 to 3 days. It started, so when did it start? It started, I don't know. Really? Okay, started at 8-9, say 8-9, 8-10, 8-11, 8-11. Okay, so 1 day, 2 days. Yep, in 2 days it goes all the way down to 407. About a 27-point put in 2 days. Now, when you're using Bollinger Bands, this is the good thing. I guess you can say the good thing about moving averages. Again, watch the live stream for the other one, and remember to comment, like, and subscribe for more support and more videos like this, more informational videos. Okay, so the good thing with moving averages is that you can tell where stock is going. Like, we analyzed this on the last video, but you could tell it went from 480 and you knew it was going to go like to 449. and you knew when to sell, where to sell, blah, blah, blah. The thing with Bollinger Bands is, in Bollinger Bands, you have to sell yourself. There is no zone in Bollinger Bands. Unless, of course, you're using the first stage, which is from edge to middle line. Then you have a zone. You know, it goes from 493 to 460. That's about 33-point put. Absolutely incredible. Then you have a zone, right? And then it goes from 462 to 432. About, 30-point put again. And you can tell where it's going. You can tell it's going to go to the next edge. You sell there. You can tell it's going to the middle line. You can sell there. That's perfect. When you're using phase 2, though, of Bollinger Bands, which is this, this is very profitable. There is no zone. So you have to sell with A, 100%, B, 1,000%, or C, if you don't have that much capital in the beginning. Let's say you have only $500 in your account, maybe $100, 35%. But if you have some capital, let's say you have $1,000 or more, then you buy 2 contracts. And you use this strategy. Likewise, you sell one at 100%, you sell one at 1,000%. It's perfect, and you make a lot of money doing this. But you have to buy 2 contracts, and you have to sell one at 100%, just so you can recover if you lose with the other one. And then, if you don't lose, and it goes down for 1 to 3 days, perfect, You made 100% and 1,000%. Absolutely incredible. And with more capital, you buy 3 contracts. So when it goes down for like a week or something, then you're also in it. But always, with phase 2 of Bollinger Bands, always buy 2 contracts. And there is no zone. There is no zone. Because you see it here, but you didn't see it when it was breaking. For example, like right here, let's say it broke. You're not going to know where it's going to go. You're just going to have to 100%, 1,000%. That's the only way. Which is why a lot of people prefer to use phase 1. Phase 1 is basically pretty simple. You do have a zone. It goes from the edge to the middle line to edge to middle line to edge. And it's pretty simple. Next stock we are going to analyze. We have 15, so Tesla. Okay, Tesla. As you can see, edge to middle line, it goes from 219 to 239. That is about a 20-point call. You see it go up, and boom, you just wait for it to go to the middle line. And then it breaks the middle line, and it goes from 240 to 268. Wow. About a 28-point call. That is absolutely incredible. But as you can see, now it's starting to go downwards. So what does this mean? Tesla has a high chance of reaching the middle line, which is about 253. And for the people that watched my previous videos on moving averages, Tesla's 40 and 20 moving average are about to cross, and the stock is below them. So Tesla has a very good potential put to go to 253, both in Bollinger Bands, because as you can see now it has a downward trend, and it's going to go to the middle line, 253. And the moving averages also say it's going to go to 253 to the moving average of 100. Again, this is why these live streams are very informative and very good, because now you're getting live trades. Now you can trade with me. Boom. Okay, just analyze Tesla. Oh, okay. Let's analyze phase 2. As you can see, it does a slant downwards, which means you buy a put. And what do you do with this? It goes down for 1 to 3 days. Well, right here it went down for a long time. It went down for like a week. Again, what do? You sell one at 100%, sell one at 1,000%, and you're bagging. you have more money, you have 1.5K or more, you buy 3 contracts, three $60 contracts. Sell one at 100%, sell one at 1,000%, and then sell the other whenever you feel like. When it starts going up, you sell it there. But again, my recommendation is one at 100%, one at 1,000%. When you're using phase 2, when you're using phase 1 of Bollinger Bands, then you sell at the middle line. It's perfect. You have a perfect zone. You know exactly where it's going. Okay, next stock, SPY. But also, if you want, you could leave some stocks in the comment section, and I can analyze them for you. If they're good, because if they're not like a very good stock or doesn't have a lot of capital, then can't really day trade with it. But if you do have a stock that you want to trade, like let's say TZA, I don't have it in here, or another stock like we have Roku, we have Apple, Google. I mean, we have all the famous ones here. Yeah. Well, if you have a good stock and you want me to analyze it, just leave it in the comment section. Really appreciate your support. Now, SPY. Again, I'm analyzing these with you. That's why it takes some time. I didn't check these stocks beforehand and be like, okay, I know where this is going, blah, blah, blah. I know what to teach. No, I'm doing this live with you guys. So SPY goes from the edge to the middle line right here. It goes from 436 to 444, which is about an 8-point call, which is absolutely incredible for a stock like SPY. If you've ever traded SPY, each of those points is massive. I made hundreds of dollars with just 2 points of SPY moving. If you've traded SPY, 8 points is a lot, and it means thousands of dollars. So it goes from 436 to 444, and then it breaks the middle line and goes from 444 all the way to 453, which is 444, 453. That is about a 9-point call. And then guess what it does? From the edge, it gets a red candlestick. So, of course, you buy the put to the middle line, and it goes from 453 to 444, a 9-point put. So you win here, you win here, you win here. Absolutely incredible. And let's say you have 2 contracts. You sell one here, you sell one here. Bam. Again, this strategy is absolutely incredible. I mean, you could use moving averages, but sometimes moving averages takes 3 to 4 days to get a really good move in. If you don't have moving averages, then you can just use Bollinger Bands. Or like Tesla, which is a live trade for you guys. You can use both. Tesla has both saying it's going to go down. Moving averages and Bollinger Bands, especially when these two cross. Where were we? Yeah, we were at SPY. Okay, we just did this. Phase 1 explained perfectly. If SPY gets a red candle, it could go down, but again, it's a green candle, so I wouldn't recommend it. Which means it hasn't really broken the middle line yet. Okay, let's use phase 2. As you can see in phase 2, SPY breaks downwards. As you can see, it was pretty even, it was a pretty good line, and then it breaks the Bollinger Bands. As you can see, it does a super good slant, and then a crazy slant right here, and it goes down from 446 about to 434. That is about a 12-point put. Again, SPY, a 12-point put is thousands and thousands of dollars. And you can see it with Bollinger Bands. And how many days did it take? Because usually it takes 1 to 3 days and sometimes a week. Again, that's why when it breaks the Bollinger Band in phase 2, you don't sell with a zone. You sell with 100%, then 1,000%. Again, with more capital, you can sell blah, blah, blah with the third contract. But with the strategy, 100%, 1,000%. So it goes 8:10, 8:11. Whoa, 8:11, 8:14. That's already 3 days. Wait, right? Yep. No. 8:10, 8:11, 8:14. That's 2 days. 8:15, 3 days. 4 days. 5 days. 6 days. 7 days. A week. In a week. In 7 days of trading in a week, it went down 12 points in put. Absolutely incredible by SPY. And then beforehand, it broke the BB upwards. As you can see, it's pretty stagnant, pretty still, and then boom, a crazy slant upwards. And it goes from 445 all the way to about 456, about an 11-point call. And how many days did this take? 7-11. Okay, so 7-12. 1, 2, 3, 4, 5, 6, 7, 8. Oh. No, it took 7. It took 7. Because this is, okay, yeah. No, 19. Okay, it took 7 days. Wow. In 7 days, as you can see, 1 to 3 days, 7 days, 1 to 3 days to a week, it went up 11 points in call. Absolutely incredible. And then you could have used the strategy to the middle line, because then it goes in put and then boom, all the way down. It goes from 456 to 450. And then as you can see, you can also use the phase 1 of the BB, because it goes from 450 to 445, 5 points. Just to review midway, because I don't want you guys to get lost. Phase 1 is when a stock goes from the edge to the middle line. As you can see, it has a green candle. It's going to go to the middle line. So it goes from 436 to 444, 8 points. And then from the middle line, when it breaks the middle line, if it breaks the middle line, it goes to the other edge. So you can see it goes from 444 to about 453, 9-point call. And then when stock goes down from the edge, it gets a red candlestick. It goes all the way to the middle line again. And then it goes from 453 to 443. About a 10-point put. Just a review. And then phase 2, as we were just saying, is when a stock breaks the BB and it goes down for 1 to 3 days to 7 days. And you have to sell with 100% and then another contract with 1,000% because it doesn't have a zone. Boom. Short review. Okay, next stock is IWM. By the way, IWM is the Russell 2000. So, very good stock to analyze with a lot of capital inside of it. Well, as you can see, it goes from the edge. Well, let's start with phase 2. So in phase 2, it breaks the BB upwards, and it goes from 189 to 196. By the way, phase 1 is edge to middle line to edge. Phase 2 is when it breaks the BB. So with phase 2, IWM broke the BB, and it went from, well, let's start here. It went from 190 all the way to 197. 7-point call in IWM. Again, a stock where it moves like a point and it gives you $100. So IWM goes up 7 points just using phase 2 of BB. So, of course, what do? You sell one at 100%, sell one at 1,000%. Absolutely incredible. And then it goes downwards. It breaks the BB downwards. You can see this huge slant, and it goes from 191 all the way down to 182. That is about a 9-point put. Then it uses phase 1. It goes from 182 to 188, about a 6-point call. And then it breaks the middle line, and it goes up. It goes from 188 to 192. But again, it didn't reach the edge. So sometimes a stock may not reach the edge, which is why you have to be, pretty aware. Like, for example, if a stock starts going down like this, like it's like at 192, and it starts like, going like this. I mean, as you can see, like this is what was happening. It just reached the zone. It was like going up and down, up and down, up and down. At that point, you sell. You know what I mean? At that point, you sell, take your profit, and then you're out of there. Because if a stock is gonna go up, it's gonna go up, pretty fast. And then as you can see, it goes from there downwards. You just buy a put, boom. Then it goes to the edge. Well, right here, it might not go to the edge because as you can see, the volatility is decreasing. I mean, just as I explained earlier, it goes from 189 to 181. That is a 9-point volatility wise. This is 180 to about 194. That's about a 14 point. That's how important volatility is. So this move right here pays you tenfold of what this move right here pays you. And not just because of it's a bigger move. I mean, just like proportional. Like from here to here, from here to here. This pays you way less than this just because of the volatility that is in here. Volatility equals more buyers, more sellers, and better profits, better contracts. Low volatility means there's barely anyone and you're not getting a lot of money for your moves. So that's why you have to be aware of high volatility and operate when there's high volatility. Or when a stock breaks the BB in a phase 2 and then it creates high volatility. So this is why these moves are absolutely incredible. You get 100%, 1,000%, boom, you're out of there. Okay, next stock is AMD. Hope you guys are having an amazing day and learning. You can put this like at work or something, or when you're washing dishes. I guess background noise, and then with the screen. With AMD goes from the edge to the middle line. As you can see, it goes from 101 to 108, a 7-point call using phase 1 of this strategy. Boom. And then it breaks. These are called fake breaks. As you can see, it sort of breaks the middle line, and then it just goes back down, back down, back down, back down, back down, back down. In this case, with AMD, this just means the stock is having some problems with going up. But this is the thing with AMD. AMD is not a stock that just moves alone. That's why you have to know, your stocks. AMD is not a stock that moves alone. That's why some of these moves aren't as reliable with AMD. Now, of course, the puts are. I mean, it goes from the middle line downwards to the edge. As you can see, it goes from 109 to 102, from 106 to 100. 6-point put, 9-point put. The puts are good in AMD, right? Now the calls aren't as reliable. From here to here. I mean, the calls are from the edge to the middle line, but not from the lower band to the middle line, but not from the middle line to the upper band. This is because AMD is heavily influenced by NVIDIA. As you can see, NVIDIA actually fulfills her moves. NVIDIA legit fulfills her moves. AMD does not because it's heavily influenced by a greater stock. NVIDIA has way more capital, way more influence, and they're both microchips. So when NVIDIA goes up and down, usually AMD also goes up and down because they're both microchip companies. I mean, as you can see, NVIDIA's down. AMD's down. NVIDIA's down. AMD went up. NVIDIA went up. But then when NVIDIA gets to her edge faster and then it goes down, guess who has to follow? AMD has to follow. So with a stock like AMD that, you're getting to know, just operate from lower band to middle line. Don't operate from middle line to upper band because it's not as reliable. But if you operate from lower band to middle line, you're still making a lot of profit. Like from here, 107 to 112, 5-point call. Then 112 to 106, 6-point put. 104 to 110, 6-point call. 110 to 102, 8-point put. How do you know? You get a red candlestick on the middle line, and then you know it's going to go down to the edge. You get a green candlestick on the edge, and then it's going to go to the middle line. Now, another stock. Again, we're operating this live. If it was any other person, they would just left out an AMD. No, we're gonna check all the popular stocks, so you know exactly what to do with this strategy. Roku. I don't operate this stock as much. I used to operate it a lot, but as you can see, it lost a lot of money. It went down. So, but if you like to operate Roku, that's perfectly fine. The strategy works anyways. As you can see, it goes from $80 to $85. Gets a green candle, you buy call, and you wait for it to go to the edge. Then from the edge, it goes from $86 to $80, a 6-point put. Bam. Then it goes from $81 or $80 to $74, where it's at now. Bam. Just using the phase 1 strategy. Now, with phase 2, as you can see, it breaks upwards. It breaks upwards, the BB. So 100%, 1,000%. It goes from $81 to $96, a 14-point call. So again, you buy 2 contracts, 100%, 1,000%. Bam, you're lit with Roku. Next stock. I just explained phase 2 and phase 1. If you want a little bit more example, as you can see, it goes from the middle line, $67 to $76. That was a 9-point call. You get a green candlestick and you wait for it to go to the edge. Then right here, you get a red candlestick from the edge, so you wait for it to go to the middle line. You buy a put. It goes from $77 to $70, 7-point put. Next stock we are analyzing is ABNB. Oh, this stock is going very good right now. Okay, so with ABNB, as you can see, ABNB also followed phase 2. Phase 2, it was pretty stagnant, and then it broke the BB. It made a huge slant, and it went from $137 to $124, a 13-point put. And all you had to do was 100%, 1,000%, 2 contracts. Absolutely incredible. And it went, it went from $153 to $144, a 9-point put, just using the edge to middle line strategy. Then middle line to next edge, it went from $144 to $136. So about an 8-point put. And then it goes from the edge, it gets a green candle, so you're about to buy a call. And it goes from the edge of 124 to 132, 8-point call. Then it breaks, so it goes from 134 to $141. Right now, I guess it's probably going to try to reach the middle line, but again, I wouldn't enter just because this green candle is deceiving. It's not just red. And a stock like ABNB, it's been moving a lot, like with jumps. So it could have a huge backing in calls. Yeah, I wouldn't recommend it. I wouldn't recommend to do this right now with ABNB, especially because it's got this green candle. If this was a red candle, then I would say buy put all the way to 136, 100%. But it's not. And it had a phase 2. As you can see, it was pretty stagnant. Broke BB and went from 141 to 150. And how many days it took? Okay, 1, 2, 3, 4. 4 days. 100%, 1,000%. Bam. Now, why am I saying 100%, 1,000%? Because ABNB has very cheap cons, and so this is definitely 1,000%. Like 141 to 151, a 10-point call. Oh, yeah, we're talking 2,000% or more. Um, yeah, but the only stock right now that can be used with the strategy is Tesla put. Yeah, 100%. Tesla truly follows this, and it does not have a green candle. As you can see, Tesla does not have a green candle. Like, you see this? It's just red. It doesn't have a green candle. Once a green candle pops up, it's pretty deceiving. I wouldn't recommend trading that. Because this is what happened here. Like, I got a green candle, and right out of a sudden, boom, goes all the way up. You see? Um, Next stock is coin. Again, we're live trading. Any other person would not have showed A, B, and B. But I have to show it because I'm honest and I want to analyze every popular stock so you know exactly what to do. A, B, and B is a stock, well, just like AMD is a stock where you have to operate from lower band to middle line and just leave it at that. ABNB is a stock where you mostly operate with phase two because look at phase two. Goes from 134 all the way up to like 153, a 20-point call. And all I had to do was, once you see it broke the BB, just buy two contracts. One sell at 100%, one sell at 1,000%. Same thing here, 100%, 1,000%, 100%, 1,000%. ABNB is a stock where you use more phase two. You have to know your stocks. Every stock is different. Well, some stocks are different. Most stocks are pretty much the same on what they use. Especially because most stocks are in SPY or in the Dow Jones, and then they move according to their index a lot. Coin. Coin, as you can see, goes from middle line $78 to $85. Call edge $73 to middle line $79, 6-point call. Would I be operating AMD right now? No, I would not. Why? Question for you. You've been watching the live stream, you watched the video. Why would I not operate AMD right now? Coin right now. You can stop it. Okay, well, the answer is volatility. As you can see, it has very low volatility. Like right here, the volatility goes from $68 to $92. That is about 24 points. Right here, the volatility is $85 to $72. That's about 13 points. So it's basically half the volatility it had. And right here, it had a massive volatility. It was from $183 to $116. That is about a 46-point volatility. So now this is 4 times less than volatility of what was happening there. So what does this mean? It means this is not going to pay you. Like, it does not matter that it went from middle line to edge. ABNB is not going to pay. Coin is not going to pay because it has no volatility. The stock does not have volatility. You have to wait until a move breaks the BB, and then volatility begins. But right now, it is not good to trade because it has very low volatility. It doesn't matter how many moves it goes, blah, 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 blah. It doesn't have volatility, so it's not going to pay you. But talking about this right here, with huge volatility, as you can see, ABNB does phase two, breaks the BB, and it goes for a long time. It goes from $67 all the way to $106. That's about a 40-point call. So again, 100%, 1,000%. This is probably 10,000%. It's a 40-point call in coin. So basically, how many days did it take? 627, 628. Okay, so 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Whoa, I was pretty. Whoa. All right, restart it. 1, 2, 3, 4, 5, 6, 7, 9, 10. Okay, 10 days. In 10 days, it went up 40 points. So if you bought a contract for 2 weeks, boom, 40 points in coin. Absolutely incredible. Just using phase 2 of the Bollinger Bands. And then you use phase 1, it gets a red candlestick, and it goes from 108 all the way to $94, 14-point put. Then it breaks the middle line, and it goes a put $95 to $82, a 13-point put. Absolutely incredible. And let's say you saw this right here. You saw this red candle, and you're like, okay, let's see, let's buy a put. No. Well, first of all, this red candle is outside the Bollinger, so it does not count. You have to wait until a red candle comes inside the Bollinger, and then you buy the put. And let's say you got a little bit too antsy and you bought the put. You're still gonna be winning because it went from 105 to $93, a 10-point put. So you're still gonna be winning anyways. But again, don't fall for this right here, because it could have kept going. Easily could have kept going, because it's outside the Bollinger. You have to wait until a red candle comes inside the Bollinger so you can buy that put to the middle line. How many stocks do we have left? 1, 2, 3, 4, 5, 6. Okay, 6 stocks left. Let's go. All right. I want to bore you guys, so I only do 15 stocks. I only do the 15 most popular stocks in the stock market to analyze. All right, so Apple. Again, I'm thinking about this with you guys. I'm analyzing it live with you, not premeditate this. Okay, so middle line, $179 to $187. That is about an 8. Whoa, yeah, that's about an 8-point call. Easy. You saw it break. You saw the green candle. Just buy the call all the way to the edge. $187. Bam, 9-point call. Here, green candle. The moment you see that green candle, you just buy that call, and then it goes from $172 to $180. And here, okay, this is juicy. Like, I would have operated this, of course, but the one I would have operated for sure is this. Look at this, phase 2 of BB. Breaks the BB, absolute slant. Like, this is like almost a 90-degree angle right here. Like, you see this? Bam, right there. 90-degree angle downwards, nearly straight line. You're just buying that put immediately. And then if you buy that put, it goes from $187 all the way to $178, which is 9 points. So 100%, blah, 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 100%, 1,000%, you buy your 2 contracts. If you wait a little bit longer, it goes, 172, which is about a 15-point put. But honestly, I would just sell here and call it a day. 100%, 1,000%. 9 points in Apple? Come on now. It's 1,000 to 2,000% easily. Oh, and then as you can see, it goes, it also does phase 1 here. But again, I wouldn't operate this. Why? Look at the volatility. The volatility is super low. And then look at the difference of volatility here. This is not going to pay you well. This is going to pay you extremely well. Okay. Next stock is Amazon. Okay, so in Amazon, let's check the live stream is still going. Yep, the live stream is still going. Okay, so in Amazon, the stock goes from $135 all the way to $141, a 6-point call using the strategy. Breaks the middle line, goes all the way to the edge, 6-point call. Absolutely incredible. As you can see, it goes from the edge, $140 to $134. Absolutely incredible. It goes 140 to 134, so a 6-point put. Now, as you can see, Amazon does go down, but it's not reaching the lower band. So what do you do with Amazon? Well, you operate it from middle line to upper band, middle line to upper band, middle line to upper band. Bam. And then you make a lot of money. And as you can see, it breaks the middle line upwards. So you buy your call, and then it goes from 135 all the way to 142, a 7-point call. And then it does phase two shortly, but it does phase two. It breaks the BB. As you can see, it's pretty slanted. It's pretty stagnant, pretty still, pretty even. And then boom, right there. It goes, it does like a 110-degree angle. And you buy your call, of course, for 1 to 3 days. You sell one at 100%. You sell at another at 1,000%. And then it goes from, 140 to 145. A 5-point call on Amazon, that is 1,000%, 100% of the time. And bam, that is how you make your money with Amazon using phase one and phase two. With Amazon, as you can see with the stock we're analyzing right now, you mostly use upper band to middle line and then middle line to upper band. As you can see, whoa, that's a crazy call. Yep. Well, exactly. Upper band to middle line up to upper band. Don't really use middle line to lower band because it's not working as well. Just how we saw in AMD, where AMD was more. I'll check. We'll see it right now again. AMD is more of a lower band to middle line type of stock. Amazon is the opposite, and it's a more of a upper band to middle line to upper band stock. You have to know your stocks when you operate them. And again, you should know these stocks beforehand, so when the move comes out, you're like 30 seconds in, you already know what you're doing. Okay, next stock we are analyzing. Okay, 4 more. Google. Google, as you can see, gets a green light, and it goes from 126 all the way to the middle line of 129, a 3-point call. That it breaks the middle line, and it goes from 129 all the way to 133, 4-point call. Again, would not operate this. Why? Please tell me why. Low volatility. Yes, low volatility. This you see right there? Look at this. It goes from 119 to 136, a 20-point volatility almost. 126 to 133, 6-point volatility. This is literally like 3 times less than the volatility that was here. So not operating this at all whatsoever. Just don't operate this. It's not paying well. But if you operated this right here, and it went from upper, it went from the edge to the middle line. It took some days, but it did go to the middle line, and it went from 132 to 128, a 4-point put. Right here, it went right from middle line to edge, from 130 to 133, $3. Then it did a phase two. As you can see, it's pretty stagnant, the BB. And then boom, upwards with, this is probably, it's a pretty good angle. And then it breaks the BB upwards, and it goes from 133 to 137, and right now it's at 138, just using phase two of the strategy. So 133 to 138 is a 5-point call. Absolutely incredible with Google. Pretty slow stock, especially now, especially after the split that happened. I will be making a video explaining splits. They happen usually every 10 to 20 years. Yeah, it takes some time to do splits. Baba. Check Baba, Meta, and Microsoft. Okay, so Alibaba. This is a Chinese stock. You always got to include a Chinese stock in the portfolio just in case. Don't really operate it, but, just in case. Middle line to lower goes from $91 to $84. That's a 5-point put. You're using phase one. It goes from $88 to $92, about a 4 point call. You see that green candlestick, you go all the way up. Then it goes, same thing here, up, down to middle line. Then the middle line to the edge, it goes from 89 to $96 to $89, about a 7 point put to the edge. And then it does a phase two, it's pretty stagnant, and then boom, breaks. For 1 to 3 days, you buy 100%, you're 1,000% intentional contracts, and then it goes from $90 to $87, about a 3 point put. So I guess your 100% put is winning. Probably sold that. Okay, Meta, absolutely incredible. Finally, stock that is pretty good with this. Goes from $309, breaks the middle line. I mean, every stock is good with this strategy, just that some stocks you have to know how to use this strategy with. For example, the rest of the stocks absolutely incredible, like Tesla, absolutely incredible, Nvidia, Netflix, all these stocks absolutely incredible. Follow the BB phase 1 and phase 2 perfectly. But then you have some outliers, like, again, AMD, which only uses half of it. It uses only low band to middle line to low band. And then another is Amazon, which just uses upper band to middle line, upper band. You have to understand your stocks. These are the only two exceptions. Meta, though, it's a full-on, and as you can see, phase 1, it goes from $323 to $309. A 13-point put. And then as you can see, it goes from $309 to $289. A 20-point put from middle line to lower band. Then as you can see, there's some phase 2 right here. Breaks the BB. And then it goes, it starts here. And then it goes from $289 all the way to $275. Again, this is why you sell with 100% and 1,000%. It has no zone. So, this is like, it goes from 289 to 275. That is about a 14-point put. And Meta, that's more than 1,000%, 100% of the time, right? So this is, and it has no zone. So this is why you do the two contracts, 100% at 1,000%. That's why you use the two contracts when using phase 2 of BB. And then again, it does phase 1. Green light goes all the way up from 283 to 296 to 307. Lower band to middle line, upper band. The last stock we are going to be analyzing, reaching the hour mark of the live stream. Remember to like, comment, and subscribe if you made it this far. If you made it this far, congratulations. Probably mastered this strategy by now. Okay, so with Microsoft goes down from upper band, which is about $355, all the way to $342. Whoa, $355 to $341. That's about a 14-point put. You're using phase 1. You see that red candle, you immediately buy it to the middle line, and then it breaks the middle line, and it goes, you see that red candle, so you buy that put all the way down. So it goes from 341 to 329, and you make that amazing put, and then it keeps going down and down and down, and then it does phase 2 right here. You see what I mean? Like, it's pretty stagnant, pretty still, pretty, even. Pretty horizontal, pretty horizontal line. And then, boom, slanted. You buy your put, and it goes from 326 to 312, a 14-point put in Microsoft. Stock like Microsoft, that is more than 1,000%. So, 100%, 1,000%, two contracts, you're bagging. Then it gets a green light, goes up to middle line. I wouldn't operate this because you don't know when. But I would operate this. It breaks the middle line upwards with a green candle, and it goes from 324 to 332. 323 to 332. So what is that? About an 8-point call, which is pretty good. Only problem is, what is the only problem here? Low volatility. It's probably like 4 times less than the one we find here. But now it's getting high volatility again. So you see, the person, whoever traded this, red candle all the way to middle line, is bagging right now. It went from 340 to 329. So about an 11-point put, and with some high volatility. I mean, higher than this. And yeah, that is it for the live stream. I hope you guys enjoyed. Please like, comment, and subscribe. Check the computer down below for a cheap Windows computer to learn how to trade. And thank you for everything. I mean, honestly, thank you for your support. Right now, the only support given can be with likes, subscriptions, and comments. Thank you for everything. Please share and enjoy. Thank you for everything, guys. Every day getting better and better. Okay. Shift T. Enjoy and make your millions.